So, hello everyone. I hope you all are doing well. Welcome to this lecture. In this lecture, we will first discuss about support and resistance, and then we will move on to moving averages and exponential moving averages. So, without waiting any further, let's start. So, basically, a support is any point from where we can see there is a high buying pressure. What it means is that whenever there is potentially a downtrend, we might see an uptrend from that point. And in order to confirm that either a certain price is support or not, we should confirm it by saying that at least two times the price has bounced back from there. For example, as we can see here, first time the price bounced back and then it came here, and when the second time it was in downtrend, it again bounced back and we can see a trend reversal. What trend reversal basically means is that whenever a certain trend is following, we can see an opposite trend to follow it. For example, right here, if we can see that there's a potential downtrend going. However, as soon as it hit the support line or the support price, we can see the trend to reverse and to move in an uptrend. So basically, similarly, this is the concept with the resistance as well, but in an opposite terms. At support, we see that there's a high buying pressure. At resistance, we can see that there's a high selling pressure. What it means is that as we can see here, that whenever the price touches this point, the prices go down. It again touches this point and then the prices go down. So in order to surpass this point, we need a high buying pressure. And that could only occur, as we can see, that has occurred here. And so we can say that there has a breakout. What breakout basically means is that the price the price of a coin has surpassed its resistance, which is quite strong. For example, here we can see that it has tried three times, but it has failed. However, when the fourth time it tried, it successfully passes it. However, one important thing to note here is that whenever a breakout occurs, the resistance the resistance will now become the support. So as you can see here, that whenever the prices were in downtrend, previously its resistance price is now its support price, meaning that now here at this point we can see a high buying pressure, and now it has developed a new resistance. So similarly, we can also say here that, for example, from here, if it breaks its support line, then we can say that a breakdown has occurred, and now this support line would become its resistance. So I hope you were able to understand this, and now we will move on the moving and exponential moving averages. Before moving to that, I would like you to show that how we can see the support and resistance in a chart, in a live chart basically. So as we can see here, if we can take a trend line or if we can take a horizontal line, as we can see right here, that whenever the price touches this point, which is 33,676, it has bounced back. So let me show you, like right here, it has bounced back. From here, it has bounced back. And from here, it has bounced back. And from here as well, it has bounced back. So basically, this point is the support point. And similarly, we can draw another support line showing this area. So basically, it is not necessarily a single price. It can be a region as well without much difference. For example, I'll show you. So from right here, yeah. So as we can see here, this region can also be called as the support, because whenever we can see that the prices are moving here, Whenever we have seen that the price has touched this region, it has always bounced back. So for example, like this, and from here as well, from here as well, from here as well, and from here as well. So this can be called as the support region. And in order in yeah, so now we can see what a resistance might look like. So in order to see the resistance, we can draw the horizontal ray from here as well. So as we can see that the 40,991 is its current resistance, which the Bitcoin on 30th June 2021 is trying to break. But it has failed once, twice, thrice. It has failed thrice. And we can see other resistance as well. For example, this region right here as well. If you can see that here it has tried to surpass it. Here it successfully breaks out, but again it goes down, and here as well, and here as well. So as we can see that there can be many supports and resistance, and once we breaks out of the support, then that support would become the resistance. For example, if I can show you that as well. Yeah, so it is perfectly happening here. So if you can see that as this was the resistance of Bitcoin, it needed that huge volume. If you remember in the candlestick study, I told you that this body represents the volume. So it needed a very large volume to breaks out. So once it has breaks out, now this resistance, as you can see that this was the resistance of Bitcoin. It was trying to pass it, but it was unsuccessful in doing so. If you can see here, just wait a sec. Yeah. So if you can see here that these three or four candles tried to pass it, but it was unsuccessful. Then this with the huge volume successfully breaks out of this resistance. And now as you can see that this resistance has now become its support, meaning that whenever the price is touched here, now it is successfully bouncing back, and now it is successful in an uptrend. So now we can expect that if the price continues to fall, like we can see that it is also forming a bearish candle, we can see that it will touch here at this point around 33,676, and then it will successfully bounce back from here. So now we will move to the moving and exponential moving averages. So the moving and exponential moving average is kind of same things, but they potentially differs in their essence. So what the moving average means is that the closing of each candle. For example, if this candle, for example, yeah. So if this candle is being closed at around 34,700, means that this value, along with the previous candle values, would be taken as an average, and then it would form a line. So basically the average of each would form a line, and it would indicate us about the moving average. So the moving average line would indicate us about how the average is performing. For example, if the average of the previous, if we have taken the moving average of what, so moving average has basically different kind of values. It basically depicts that if the moving average has been set, for example, to 50, so it means that the closing of previous 50 candles has been taken as an average, and it is forming a line. So it basically helps us to identify that in what trend we are moving into. So what exponential moving average helps us to identify is that the moving average doesn't show the results of the newest candles being formed. For example, if these candles were in an uptrend and now we can see a downtrend, so exponential moving average will show this trend quite quickly. And the moving average, it is a simple moving average, So it will be a little slow to show us that average. So now coming on to that, why we would need these averages. Well, we would need these averages because it helps us, because as I have already told you about support and resistance. So basically these averages and exponential moving averages also helps us to at identify the potential support and resistance. And so we would see that with them. So here I would like to tell you about the strategy of how to set the exponential moving. So basically, exponential moving average is being used quite widely, and personally, I found it to be quite useful. So I would recommend it to you as well. So for setting up exponential moving average, so as I've already discussed, exponential moving average or moving average, these, although these both are different things, but there's a slight difference, and that's why we use exponential moving average. But as I've already told you that you can use multiple values, for example 20, 30, 50. So what are the best, some of the best values which you can use? So for, so basically this is 4 EMA's setup, and for that I would recommend you to use 22, 55, 100, and 200. So basically, these are the four averages which I would recommend you. So now the question arises how we will use that. So first, you will need to go here in the indicator section, and here you would need to write moving average exponential. So here, as you can see, it is giving us that option. You can also star it, but yeah. So you would need to click it 4 times because we need 4 moving averages. Yeah. So basically, I have the subscription account, but this is a demo account. So basically, the free account, and as I have suggested you to use these free account first, this basically allows you to add only three, oh, only 4 indicators. So as you can see here as well, we have volume. So we would remove volume, and then we will again go to here, and then we will add moving average exponential another. And just wait a sec, I'll figure this out. So basically what is happening right here is that it is only allowing 3 indicators on the free account. So what you can do is you can go on another website known as Binance. Basically, this is the exchange which we will later talk about. But from here, you can go, you can select market, you can select classic trade, and here also you can get a chart. Yeah. So basically here as well, you can see, you can say BTC, USDT, or you can also get a chart on any of the other exchanges, but I would recommend you to use this exchange, and then you can go here. Right here, you can click on trading view chart. It would take some time to load, yeah. So now you can go on 4-hour chart, and you would remove all these moving averages, and then you will go here technical indicator, and then you will write EMA, and it will give you moving average exponential. So you will click it 4 times, and it will easily give you that. So basically you would then need to click on the format button, and as I've recommended you 22, and you can change the color as well because I can see that the colors are quite similar. Yeah, and I would make it more. Yeah, so you can here customize as well. So I would do that, and I will be back. Yeah, so I have set up this, and I've shown you how to set up one, and then I set up all four. So basically you would need 4 exponential moving averages: 22, 55, 100, and 200. So what these moving averages basically show is potentially, as I've discussed with you, that it shows the support and resistance. And we can clearly see here, if we can see, yeah. So basically here, as we can see here as well. So yeah, so let me show you. Yeah. So basically, as you can see here, that whenever it has touched this 22 EMA, it has bounced back. And again, it has bounced back. Again, it has bounced back. And then it came near it, and then it bounced back. And then again, you can see here as well that it continues to pass. And as I have discussed with you, that in order to break any kind of, either to break the support or resistance, we need a very high volume. So as we can see in this candle right here, in order to break this 22 exponential moving average, we were in search of this gate volume, and that it has successfully broken it. But now we can see that these all were the supports previously. But now this green one, which is 55 exponential moving average, which is this one, if I can show you, let me remove everything. Yeah. And now if I can show you that, if you can see here as well, that now this green exponential move, which is 55 exponential moving, it has now become the resistance, because the candles are continuously trying to break this, but they are once, twice, thrice unsuccessful. So we would basically need a very high volume to break this. And if we have successfully broken this, and when we would confirm it, when there will be, in the 1 hour chart, we would need at least 4, 5, and even 8 candles to confirm that. But I would say that as this whole 22 EMA, this whole 22 EMA was the support, I would say that now it has become the resistance, and now that it will approach towards it, and it might again come down to this 20, oh, to this 55 EMA from that 22 EMA. So basically, this would help us to see to see how we can set up the orders, and if we can move in a higher time frame. So if we can move in a higher time frame, and if we could remove all our drawings, yeah, just wait a sec, I'll remove all the drawings. Here it is, here it is, here it is. Yeah. So as we can see, if you can guys see, this is how beautifully it has bounced back from this 22 EMA. If you can see here, so if you can see here, yeah. So if you can see right here, that it has perfectly bounced back from this 22 EMA to up. So basically, it would help us to place our orders accordingly, so that in order to help us to say that where we can buy and where we can sell. So basically, there's one important saying, which is that you buy the support and you sell the resistance. You buy at this support and you will sell at this resistance. So this is a saying which we would need to remember. And another thing which it would help us to tell, is that if you can see here that this is 200 EMA. So basically, right now on 30th June, the market sentiments. The Bitcoin has fallen from around 64,000 to now it is around 35,000, and it has fallen even below that. But now, the in order to consider this as a bull market, we need to cross this. We need to cross this 200 EMA in a higher time frame. Like if you can see in a 1 hour time frame, yeah. So if you can see if the chart will load, yeah. So if you can see that in a 1 hour time frame, it has successfully broken it. But now we would need in a higher time frame, such as 4 hour, and then we would need in a 1 day time frame. If you can see that in a 1 day time frame, we are sitting at just 22 EMA support. Even it is the resistance. It is not even the support. So we would need to establish that in order to consider that now, yeah, we are in a bull run and the market will go up. So this was basically the lecture about moving average and exponential moving average. These are basically for a beginner. I would say that you can use this in order to in order to check where the resistance and where the support is. And not only that, but you can also draw trend lines in order to check the support, or in order to check the support or the resistance of any of, for example, if I can show you here as well, that, oops, yeah, so I would need to take a trend line here. And if I can show you here that the Bitcoin was moving here, 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 here. So basically, this would also help us to show that how the support and resistance is working. So support and resistance need not to be in a straight, like it need not to be in a, it can be for in a parallel line as well, as you can see here that it was touching this point and then it was moving up, it was moving up. So you can also trade this way. But remember, before taking any trade, you would need at least two indicator, three indicators confirmation before taking any trade. So yeah, so this was one of the important indicators which I would recommend you to use definitely and set up on your chart as soon as possible. And as you can see that these EMAs were not, I was not able to set up on this free account. Yeah, so I have the subscription account. So on that account, it is you can use unlimited indicators, but on this account you can't. So basically, yeah, so you can use this Binance website, and I would suggest you to check this out. And here you can come from trading. You can click here on Trading View, and then you can click here on the technical indicators to add all these, and then click on settings to customize it. And you can, if you want to hide a certain EMA, for example, if I want to hide this, I can just do this, and now I can see like here. So I hope this was helpful. Let's meet in the next lecture. So hello everyone. I hope you all are doing well. In today's lecture, we will discuss about another important topic, another important indicator which would help us to predict that either we should buy this buy a certain coin, for example, Bitcoin, at the current price, or we should wait a little more. So basically, what that indicator, before discussing that indicator, I would like you to ask if if so many people suddenly starts to buying Bitcoin, it would rise exponentially. I hope you we all could conclude that. So it would rise exponentially. So over the coming days, what we would predict that, yeah, so basically the price of that coin would fall a little bit, which in terms of this crypto market is called as correction. What correction means is that since so many people have bought this coin, so some will sold that and booking their profit. So it would cool down a bit. So this basically means that if the coin is overbought, it would mean that it would come down and the price would come down in the near future. And if the coin is oversold, which would mean that there is so much supply and there is a little demand, means that bears are much, much, much more active than the bulls. And then we would predict that the coin would then rise because it is now very much underappreciated than what is actually worth it. So how we can conclude that is basically how we can see that is basically with the help of an indicator which is known as RSI, which stands for Relative Strength Index. So if how to add that indicator, I would show you first that if you can go to the indicator section, and then if you can write RSI and click here just once. Now you can see that at the down there is an RSI. So you can basically click here to move that up, or you can move that down as you wish according to. So here if you can click on settings, then you can easily set it up. I usually set it up at yellow because it helps me to see it clearly. And another important thing is that you would need to select this upper band to 80. Oops, sorry, 80. Yeah, and you would need to select this lower band to 20, and then you would need to click OK. So you can change your change color, but do remember to set RSI at 14 and the upper and lower to 80 and 20 respectively. So what this basically RSI shows is the current momentum of that coin. So there are two important levels which we would need to consider, or we could also say four important points which we would need to consider. So the first is between 20 and 30, and another one is between 70 and 80. Yeah. So basically, these are the four important terms which we would need to remember. So what another thing we need to consider and we need to keep in mind is the fact that market always repeat its cycle. What it means is that if something goes down, for example, if we take stocks, for example, if that value goes down, then it will obviously come back up. So similar is the case with the cryptocurrencies, that if once it will go down, it will come back up as well. So here this basically RSI depicts this perfectly. So the value between 20 and 30 shows us that this coin has been oversold. What it means is that the bears are much more active than bulls, and this coin has been sold in that much quantity that the price has fallen down, but it is now too much undervalued. So if the RSI is between 20 and 30, we would consider taking a trade. For example, if we could see here, if we could see at this point, yeah, if we could see at this point, and this point is, if you could see, yeah, so 31,000, around 31,000 at this point, if I could show you. Yeah, at this point, we could see that the RSI was here, which is around 25. So it was between 20 and 30. So we could suggest, and as we have discussed in the previous lecture, that the price has already bounced back twice from here. So since that we can see that this is a good support for the Bitcoin price, and here in the RSI, it is also indicating us of the value between which is 25, which is between 20 and 30. We could take a trade, and then as we can see, the prices moved up from around 31,000 to all the way up to 38,000, and we can see that you could have easily booked around 20% profit, 22% profit. So basically, RSI helps us to see this. And as you can see, as we move further, we can see that as the RSI was here, yeah. So as the RSI was again between 25, we can again see headed rows. And so we would not need, and also that one another important tip is that we would, as I've told you, the important word hodl. It means that if you are in a loss, you would just need to be patient and you would not need to sell in panic. Because if you will sell in panic, you would regret later. And now, if you could see that the 70 and 80 point would be opposite of it. And I would like you to guess it first. I hope you guys have guessed it right, that the 70 and 80 would indicate the value of overbought. It would mean that from this point, the value would go down. So if you can see somewhere between, yeah, so if you can see here, right at this point, so if we could see here at this point around 64,000, when the Bitcoin would be considered as oversold and it was touching around 78 RSI on a 4-hour chart. So we could predict that at this point and at this RSI, the RSI would go down, and it has happened exactly like that. And if you can see here as well, when it was at 58,000, the RSI was again at 77,000, and then right here, and then it again went back to its where it should be. So basically, you would need to take the trade, and it is not necessary that from 78 it would went all the way down to 20 or 30. but it is always recommended to use to take a trade whenever the trade is between this. For example, if the 20 and 30, since I would recommend you all to first try the spot trading, at least with the 1 year or at least with the 2 year of experience, then you can move on the future tradings. And if you don't know about future trading or spot trading, don't need to worry. I'll let you know later. But since we are only taking trade and expecting the price to go up, so you would need to take the trade when the RSI is between 20 and 30, and we would need to sell it when the RSI is between 70 and 80. Now, in terms of RSI, I can show here, in terms of RSI, you can also see that there's a support and resistance like this. Whenever the RSI is touching this point, you can see right here that whenever the RSI is touching this point, it is going down. So we can also see that support and resistance in terms of RSI. But its basic and the most vital use is these values between 20 and 30, which indicates that that the asset, which is Bitcoin, has been oversold and it is the right time to buy this. And whenever the value is between 70 and 80, you would need to book your profit. So I hope this RSI lecture helped you a lot and it would help you to polish your trading skills and to get profit. Thank you so much. Let's meet in the next lecture. So hello everyone. I hope you all are doing well. In previous lecture, we have discussed about some of the important tools, which is, for example, RSI. We have discussed about the exponential moving averages, and we have also discussed about this 4 EMA setup, and we have also discussed about the candlestick study. Now, another important indicator which we are going to discuss today is MACD. What MACD actually stands for is moving average conversion and diversion. However, it is important to understand as a trader, you would need to know that what it shows. It shows you the strength and the momentum, the direction, and the duration of where the stock or where the Bitcoin or where any other cryptocurrency is heading towards. Obviously, you would need to see that in a higher time frame if you are planning to take a trade for the mid or long term. What mid or long term basically means is for 3 months or 6 months, and what a short term would mean is for few weeks. So even for short term, you would need to know that. So you would need to take a higher time frame, which is for 4 hours. And if you can see here, if you how to add that is basically go to here and then add MACD. So here the first option you will click here and the MACD would be added. So for now, we don't, obviously during the trading, you would need RSI as well, but for now we don't need it. So we will just cancel it out and so that we can focus. You can obviously move it up and then I would recommend you to have some changes in it as well. So just click here and basically it is dependent upon you. It totally depends upon you of how you would like to set this up. And yeah, so the values would be 12, 26, and 9, and the color you could change accordingly. And another important setting here is that MACD would be indicated as the green line. And if I could make it more prominent, yeah. And this line would be as red line. Well, it totally depends upon you which color you would like to indicate it with, but I've done that for a reason. Yeah. So basically, if we could see that one of the important factors of the MACD is that these histograms and moving averages is basically telling us about about the momentum where the stock would be headed. So the only important thing as a beginner which you would need to know before investing is that you would need to know what a crossover is. So the crossover is whenever these two moving averages cuts both, and the one which is above, so basically this green one and which is the MACD moving average it should always be above in order to consider a bullish trend. And whenever it falls below, and so we would call that as a bearish pattern. So here we can see that this is happening. So basically, sell your if you sell any of your asset here in loss, you would be avoided from this big loss. So we would discuss that later as well. But for now, we you need to make sure that whenever there's a crossover, we can see here as well that this in this area here, we were basically in bearish pattern because the prices were moving down, and because the red one, where the red one was in the lower, was at the upper end. So basically, the signal one was at the upper end. And now as we can see that as soon as the MACD here crosses over this, we can see a bullish pattern and the prices are rising up. So we can also verify that by seeing the prices. So if you could see here as well, if I could zoom in a little, and yep. So basically, if we could see here as well, that at this point where the divergence is happening and the red one is above the green one, it means that a crossover is happening. So if you could look here that this crossover is happening right here, it would mean that the prices would go down, and as you can see it is happening. And over here, if you could see, for example, if you could zoom in a little bit, yeah, and if you could see that right here as well, the prices, that there is a crossover right here, somewhere right here. So as soon as there's a crossover, you get that indication that it would move up. And as you can see that the green line is above, so if you would have taken the trade here, then the prices, as you can see, went from here almost here, I guess, yeah, from 34,000 to roughly around 40,000, which is almost 20%. So if you could have indicated, obviously you would need RSI as well, and you would need to consider the market sentiments as well, and many other factors as well. But if you could just purely see for now on this basis, it would perfectly indicate you the prices would go up in the long term. It has shown that to you as well. So the basic purpose is that whenever there is a crossover happening, for if the market is currently in the bearish pattern, for example, if you could see here that the market here is in bearish pattern, and if you can see that there's a crossover happening, there's a potential that the prices would move up and there will be a bullish trend. So as you can see that it moved from right here till right here. Obviously, you would need other indicators as well, as I've said previously, but this is one of the important indicator where only you would need to understand that whenever there is a crossover, you would need to decide accordingly. For example, I would repeat that if the crossover, for example, if you are moving in the bearish pattern and the green line which is shown in the MACD. Let me zoom in as well. If this green line is below this red line, we would say that if this green line is below this red line, we could say that we are in a bearish pattern. But as soon as there's a crossover, and you would need to wait a little that the crossover has been successful. Like for example, here as well, you can see that there was a crossover, but if you would have taken trade here only, you could have been in a loss. But so you have to wait a little while, and as soon as it rises potentially above that, then you would, for example, from here you could take the trade, and from here, as soon as you see it is coming down and the red one is rising above from here almost, yeah, from here you could exit the trade. So this crossover is pretty important, and in order to take the profit. But again, I'll repeat that you would need other indicators together with it in order to check whether or not that the prices would rise or not. And another thing which I would like to add here, my battery is running low, yeah. So another thing which I would like to add here is that not only this, but you can also try moving averages here as well. Not only exponential moving average, but moving average. For example, you could take 50 moving average as well. And if you see that the two, for example, 4 hour two candles are being formed above the moving average, or we could say that, or even 4 hour, let's consider 4 candles of 4 hours being formed above the moving average. Then we could say, yes, there's a potential breakout, and we could see here that there's a crossover. Then you can enter the trade here, and you can book the profit whenever you feel that the profit, whenever you feel that the price would go down, or whenever you feel that there's the ample amount of profit. So I hope this will help you in order to trade successfully and to get profit. Meet you in the next lecture.